Me. All right. I've been trying to talk with Greg behind the curtain, but for some reason this new computer's not letting me hear him, and I'm hoping he hears me. Okay. Anyways, we've got Greg Lee back again. He's going to show some of his techniques for trading the E-minis, so I'm not going to do any elaborate introduction. I'll let him go to it. Greg, welcome again to the Candlestick Forum, and we're interested in seeing what you have tonight.
Awesome. Let me do an audio check. Now, I'm trying to go full screen on this. Is that a problem for them to see, to go full screen? It keeps on popping back. Yeah, very loud. Okay. Let's see. Oh, it is. Okay. I didn't realize that. Okay. Well, welcome, traders. Welcome to E-mini Trading School. This is our trading room. We're market profile traders. I'm so thankful that Steve is sponsoring this event. I did listen to Steve's event again. I listen every time he does an event in our room because there's always interesting information. I'll let them kind of deal with that. I don't want to take control over how they want me to do this. I really wanted to show full screen for them, if possible. So anyway, I'll go ahead and get started on this. Thank you so much again for sponsoring this event, and we'll get started here. Now, we're market profile traders. I'm going to go ahead and bring up a presentation, a PowerPoint presentation on the slide over, and but I can answer questions along the way, and so feel free to ask them. Let's go ahead and pop through here. Make sure you're aware of the risk of loss trading futures. You're all aware of the disclaimer for that. If you have questions, feel free to contact us or type them in here or put them, on our contact us page on our website. E-mini Trading School is one website, and then I have strictly a market profile website, and that's really just to get attention of market profile traders. Really, it's the same thing, but it's just to make sure that I don't miss out on meeting as many MP traders or people who want to learn market profile. My email, of course, is Greg at E-mini Trading School, and David works with me also, so if you want to contact me. We have some various items on our website. I'll show you that a little bit later. Let's go ahead and just go through these slides here. What we're going to do is we're going to introduce you to the following. And basically we're going to talk about who we are as traders, what is a trader, what you will accomplish with market profile trading, and being an auction market theorist. We are day type traders, but we also read, delta, auction market theory, as well as profiles. But we do like to understand the day types. The day types will tell us where the market's going, very well. So we are day type traders. The only thing that trumps the day type is going to be if there's excess inventory or excess inventory. Excess inventory. Really, excess inventory is pretty huge. We might have had some excess on the S&P up there, and that's really why we had that sell-off. They started getting too much inventory up there, and you might even have a doji candle up there, whether it was on a 5 or a 5-minute chart or a 15-minute chart, or you were using, a 30-minute chart. We prepare every day. Now, for us to be prepared, it's like the Super Bowl. You're going to be prepared. It's like a professional sporting event. You have a game book, and we have our game book, which is our trading plan. We do have a specific trading plan for our trading. Now, the TPO charts stands for time, price, opportunity. That was first introduced by the CBOT. It's not something that we created. We made our own TPO indicator that is very sophisticated and accomplishes things that no one ever thought that could be accomplished, making composites that go back for a year by clicking a button, high volume nodes, single prints, just very helpful clues to what the market's doing. So we're always prepared. We always need to know what, where, when, and why. And it's going to be a little bit of a new trading language to you, so you may want to download our glossary on our website. If you go to E-mini Trading School, bottom, there's a link for our trading glossary. What do you mean by excess inventory? Nice question. I hope you don't mind if I answer some of these questions for the traders along the way. We may spend more time, but excess is going to be like, look at it like this. First off, excess is going to be when there's too much inventory either on the buy side or the sell side. Another way to put it is think of your, and we'll just use it in these terms. Think of your, and there's different ways we can give you this analogy, but this analogy seems to work best. Think of your local grocery store, and they buy 100 pallets of peanut butter, and they get those 100 pallets. Each jar ends up costing them 25 cents a jar, and their inventory usually is maybe 20 pallets. So now they have 100 pallets of peanut butter. They'll run an ad on Saturday in the paper advertising peanut butter for 75 cents a jar, Sunday $1 a jar, Monday $1.25 a jar until their inventory balances out. And excess is really important to the markets, and I can picture it. I am sure you have a candlestick on a 15-minute chart or a 5-minute chart or a 30-minute chart that was showing. So I'm not, I don't know all the different candlesticks, but it could, like whether it's a doji up there, I'm sure you had something at the very top. I'm almost 110% positive on one of your time frames you did. But that would be excess inventory where they got to balance the inventory. And you can have it either on the sell side or too much inventory on the buy side. So that would be excess inventory. And excess is going to be a clue of the end of a move. Now, the market what happens is they run it up until all the, trying to get rid of all this inventory, and then it just stalls and comes back down. And a lot of times when you have excess either at the top or at the bottom of the market, depending on the time frame you're looking at, but I saw this on a 210 chart. It could indicate that the market's going to push lower tomorrow and going forward for a little bit until they balance out the inventory on the S&P. So it could be toppy right now, and I'm not afraid to go out on the limb to say that. It definitely has some appearance of excess up there today, and so the market is going to find a place to balance. If I had to guess a place the market's going to want to balance, it should be right around that 1500 area, 1505, even down to 1495. But we'll have to wait and see tomorrow. We'll have those signs of where it starts balancing. Back to here again. Feel free to ask questions along the way, like TPO information. It's all automatically plotted, and we're going to see an upper value area, a lower value area, a point of control, which is usually the fattest part of the profile. Now again, learning the day types is key to understanding what the markets are going to do. And we have a written trading plan that tells the trader exactly what the market will do to the tick. It's so fascinating. I hope I get time to show you like my favorite trade today. And it's just that predictable when you know the day type. We're not, and I don't want to step on anyone's toes, but we're not an indicator sweatshop. We're not selling green light, red light, and you can find that anywhere on the internet. But as you know, and obviously Steve is doing something right because there's a lot of you in here. So obviously that he's doing something that you enjoy and you come to. But we're not an indicator sweatshop. We're market profile traders. We are day type traders. We're profile traders, and we read market delta. We always understand the 4 W's of trading: what, where, when, and why. And it's really important. Anytime, and you guys probably all know this, or you traders know this, anytime you make up a trade where you think the market's going to go up or you think the market's going to go down, in my case, anytime I think, I assume I will be wrong. So either I see it doing the what, where, when, and why, and when, or I don't. And anytime I try to think through a trade, I'm wrong. I accept it, and it's a psychological line in the sand that you have to stop doing and then start doing the correct thing. So we always, we claim, and we do. I'll say this with confidence. We always know where the market's going to go. We know why the market's going to go there. And we get these clues from our software: initial balance, capping levels, value area, high volume nodes, low volume nodes, single prints, minus development, unfair highs, unfair lows, poor highs, poor lows. Like right now, the bond's at poor highs on the Globex session. So they're going to want to probe up to 24. So we always know, we can always tell ourselves a story. When you're in our trading room, you're going to hear me talking, like telling myself a story, what the markets are going to do. It's the same story you have in your trading plan. It is the same story. So we all would be telling ourselves the same story. This written trading plan and our software organizes all these clues into what trades we can do based off the day type. Yesterday, for instance, on the S&P, it was a vertical day up. That was, it didn't end up being a trend day like that down session was 3 days ago. But yesterday was a vertical day up, and we never got short once. We were always getting long in the market. Our trading plan says to do that. Our trading plan says today's a must-trade day. Trade as many contracts as you can, but only to the long side, and here's the areas that we're going to get long at, and this is where we'll go. But you have to be willing to learn something that might be different, or like in a lot of our cases, even myself, because I did indicators for 15 years, and I consider any money I made in the 7 years of 15 was random luck based off of what I know now, and I dismissed what I do now because, well, it looked like it was too hard to learn. So by saying that, then I would say it can't work. But the fact is, you're not going to master what we do in a week or a month. It is a 1 to 5 month learning process. And I like to say we only have to remember, but we have the answers in front of us, like 40 things. You don't have to remember it because the trading plan's telling it to you, but you have to be familiar with these 40 things. And so we're kind of learning a little bit of a new vocabulary. But the vocabulary makes sense, like, unfair highs, unfair lows, excess inventory, value area. So everything that we talk about, you can relate in the real world. And we're traders. Here's another example. If the gas station down the street, you got 2 gas stations down the street, one of them raises their prices 20 cents higher than one next door. Well, naturally, less people will buy gas there. Supply and the supply's there, but the demand's not there for them. So we really look at the world, everything that occurs in the world, as the auction. What is the auction doing? Other examples, the car manufacturers, when they have too much inventory, well, you see on TV the rebates that they have. On TV, all the commercials, $2,000 rebate, you hear about that, and they just pass it down until their inventory balances out. So the way that we trade is the same way that businesses conduct themselves. Now, when you learn what we do, you will end up being pleasantly surprised and rewarded. Now, the weak link is really the trader. Our trading plan, we like to say, is always correct. You just have to not fight the trading plan, argue with the trading plan, but it will not be what you're used to seeing. It really won't be. It's not complicated to learn. It just takes the 1 to 5 months to learn it. Now, who we are as traders, again, we know that we're saturated with information on the internet about trading. We do know that probably 95% of traders do fail with trading. So with that said, you have a 95% chance of learning wrong information, opinions that don't matter. Like, for instance, never trade the first hour. We'd love to trade the first hour. If the market is a narrow range during the first hour, some traders will say, oh, this market's quiet, I'm leaving. Well, we're going to be saying it's going to break out. We're always telling ourselves a story. Now, another misconception is not to trade during lunchtime. Well, imagine yesterday if you didn't trade during lunch. You missed part of the move going up. We'll trade even the last hour. We'll trade even the closing bell because we have developed that much confidence of what, where, when, and why. So it's pretty fascinating. But again, I'm going to pound it in. It takes 1 to 5 months to learn what we do. If you focused every day, you may learn a lot in a month. But the problem is there's only 1 trend day per month per market. Well, that means that you may not see a trend day for 30 days. So it's kind of hard to learn something if you don't get to see it. It's like the race car driver's never raced in rain before. He may be a winner on dry pavement. First day he races in rain, he can't win because he's never done it. Doesn't mean he won't. but he just will have an issue that time because he's not familiar with it. So, realize there's 5 or 6 vertical days a month, 1 trend day a month. So it's going to take longer than a month to see this correct way of viewing the markets. Yeah, the doorbell, I can't do anything about it. We've never figured out why I get a doorbell with my Ninja software. Anyway, remember, your mind is telling you, what we do is hard to learn. And you need to dismiss that thought. Again, it's only about 40 words. It's not a KISS method. It's not a get-rich, fast scheme. And keep in mind, when you were going to school, all your tests had more than 4 questions on it. Probably some of them had 20. We could actually write an essay, a paragraph, an essay, whatever way you want to, say it is, for every trade we do, or for the day type. We can tell ourselves that kind of story. And once you see it more than one time, then you will do well the next time it does occur, because it is very repetitive. What the market's doing is defined by us by the day type. What do I mean by 1 trend day a month? There is truly, you could have 2 trend days, but every market experiences 1 trend day a month. And we have an exact definition of how to know that there's a trend day. I'll have to do that later on, Ron. Maybe you can help me tomorrow, or maybe you can help me on Tuesday, Ron, with that if you come to our trading room. So a trend day is going to be defined with our software and our trading plan. And on a trend day, we call trend days must-trade days. Trade as many contracts as you can and never go against the trend. Obviously, and our TPO indicator will also help you define as a trend day, but it's a no-brainer to define a trend day. The downdraft 3 days ago was a trend day down. Time frames, as an MP trader, we focus on 30-minute time frames, but we trade 5 and 15-minute and 30 minutes. It doesn't really matter as an MP trader, and that's why I'll show you some signals. Because as an MP trader, it's not about a 1-minute time frame or a 5-minute time frame. It's about what is the market doing? Where's the market going to go? Why it's going to go there and when? And the day type will tell us this. See, the markets are either one time frame in one direction, probing for value to see who wants to do business, or it's a two-sided auction. All businesses have two-sided auctions. You can't constantly have a business where the prices just go straight up. They have to balance prices. And you may view the markets as being choppy. Well, to us, we know they're balancing the auction, balancing the market, getting ready to one time frame. So we can always tell ourselves, the market's always, like I said, it's either balancing and bracketing in a two-sided auction, or it is one time frame in one direction. No, it's for all markets. I actually picked Apple at the bottom based off our software, and I'm doing that for my parents. My parents they sucked themselves into a buy and hold on Apple. It was around 506, and it was in a bracket. And I said, before this news comes out, you guys need to exit. And he's like, I'm thinking about adding positions. And I'm like, absolutely not. Apple was balancing up there, waiting for that last report that came out, a few weeks ago. And I said, this thing is going to bust out here. And the weekly is one time framing down. So the direction is probably to the downside, but it will stop at, I forget the exact number I told him. It plotted on our screens like 434. And called me up the next day, Greg, it went right to where you said it was going to go to the tick, and it did go down like you said. And I go, Doug, it was, one time framing down on a weekly. That's really, what it wanted to do. So then he's like, what's my next step? How am I going to get out? And so I gave him a price, where he can get out and so forth. But anyway, it works in all markets. Simply stated, the markets are either probing to discover if anybody wants to do business, or they're simply balancing. That's what happened on the S&P up there. They were probing to see who wants to do business up there. Nobody wanted to do it, and the inventory started building up, and they got the excess going. When is the market going to go? Knowing the day type's our first clue to when. And this is all done. We have a conviction indicator that tells us that participants are piling in. We have audio alerts that tell us when this is all happening to give you a heads up, because the more you can be alerted to what is happening and see it, the more you're going to learn and remember going forward. I'd like to say, and we do say in our trading room, you will get 1% smarter each day doing what we do. For 30-minute time frame, one trade a day, a month, No, I'll show you shortly. My point with the 30-minute time frame, the 30-minute really tells us which way the market's going. But I trade a 5-minute chart. We can get 5 trades a day, 4 trades a day, 2 trades pre-market. The 30-minute is just really defining so much information for us. And we like to, time, price, opportunity. A 30-minute, the more time it spends at a level or above is telling us what's going to happen. So we kind of, translate what we see in the 30-minute. Do I have access to trading? No, I use the Zenfire data. I use Kinetic for the stocks. I use Zenfire. No, same data. Everything's all the same. Now, when the market's going to go, when it's going to break out, you'll see it like in a microbalance, and then it's going to start probing for new business. The markets can only be doing one of 2 things, as I keep saying, either balancing the orders or imbalance, looking for new business. Everyone, buyers and sellers, are either in agreement with price at a balance area, or the market's going to start probing to new advertised prices or previous areas where two-sided trading can then be conducted again. So picture this, market sideways, it breaks out, sideways again, breaks out again. That's what the market will always do. It's always looking for a place to balance the orders, but it will have to one time frame first. And you can one time frame on a 1-minute chart, a 5-minute chart, 15-minute chart, 30-minute chart. It occurs on all time frames, but the market is always looking for a place to balance the orders. Now, the increased time a market balances and the smaller the value area gets is a great clue to a forthcoming breakout. That's why we saw the breakout to the upside, and that was a blast today. And again, I'll try to show you shortly. When can also be defined where the trade location is. Another part I'll show you on the charts. And we have a rotation indicator that will show us our trade location. Stop location is important. We don't use fixed stops. Anytime you use a fixed stop on a market, you're saying, I know a magic calculation that works all the time. We don't use fixed numbers. We let the market tell us where our stop's going to be, and we let the market show us where our trade location is. Good trade location usually translates into great stop location. So you can just pick those trades with good trade location. Good trade location also implies when is coming sooner than later. And again, these are just a few of the clues that you'll learn with what we do. Where do you see the market going? Again, the day type is our first clue to where the market is attempting to go. The day type does help direct to the tick where the market is attempting to go, like a clock. We also see it going to our delta levels. We plot this automatically. We call them our steel blues and our blues. So we really are reading inside the option automatically to see where the market's firmly going to go to conduct, back again, two-sided trading before probing to the next predicted level. And the next predicted level can be our steel blue or a expected high or low that our software automatically plots and tells you. Where can, also could be a value area. And value area, upper value is where 70% of the business has been conducted, and lower value is where 70% of the business has been conducted. And so value is like upper value is going to be an area where we know and the markets know that 70% of the business has been conducted, and then also there's low value. And we use our value area off our TPO chart or our historical value area that we use on our 1, 5, or 30-minute. It's going to be the same calculation. Value area is the same on a 5-minute as it is on a 30-minute. So everything matches. The market likes to do two-sided trading at the upper value area. It also likes to do it at the lower value area. Or it's going to start probing out of value, looking for that new business. Our confidence is a byproduct of knowing the day type and following the written trading plan, and then executing the trade setups consistently with each day type. Why? Why is the funnest thing? Imagine knowing why. The markets are not random. When you know why, the markets are going to do what they're going to do, it gives you so much more confidence. Because remember, the markets are, and I'll keep on saying this, in a continual auction process with buyers and sellers. Two-sided auction is found at high volume areas, value areas, point of controls, Globex highs and lows, minus development areas, and this is just to name a few. The value area again is going to be where 70% of the business was conducted on the upper side and 70% of the business was conducted on the lower side. It only makes sense to know where upper value is. So I'll try to pick another example why we want to know what value is. you may have 6 people who are going to buy a Ford Mustang tomorrow. And you're going to have one guy who totaled his car, insurance company is going to, just give him the money, go buy a new car. He'll go buy a new car without shopping the next day. You'll have the high school or the college kid who's getting all the extras on the car, so he's going to pay the most. You're going to have the guy who's been shopping for a year and a half for his family. He's going to be looking, for the lowest price, you may want to say, in the United States for that car. So the car price of this Ford Mustang is going to travel between low value and upper value throughout the day when it's two-sided trading. So he could wait till we're at low value, buy the market, knowing that it's going to go to upper value, where the other 70% of business was done, and vice versa. You're going to know when it's going to go down. Now, if the market is attempting to go down, it will go down to low value and to the tick. Again, this stuff is all amazing once you see it, each day. How long do you determine the type of day? It's always the big question. It's a simple answer to the day type. There's no rocket science behind it. It's one sentence. Sometimes we know the day type even before the opening because of Europe. Sometimes we know the day type prior to the first hour because the bonds are telling us, because they open up an hour and 10 minutes early, and their day type's already determined. But we always know the day type after the first 60 minutes. Always. And we always know the day type throughout the day. If it changes, we put away that trading plan and pull up the next trading plan to the day type. So we always know what the day type is, but as a rule of thumb, it generally could take an hour because it has to set the balance. The first hour determines, basically the highs and the lows and where did we open up at, and is there conviction. So the first hour really helps determine all this. But we always know the day type, and you'll know it's the easiest part. Don't let that scare you. Day types. Let's talk about reward to day type. This is why it's really important. A non-trend day is going to have a smaller reward than a vertical day or a trend day. Like, yesterday was a vertical day. The downdraft was a trend day. You have larger rewards, so you can actually trade more contracts on that day because your probability. Non-trend days are actually one of my favorite day types because we're patient. We're very patient, and we're going to be 100% correct all day long. We're going to be selling the highs and buying the lows, and we'll stay away from fiddling in the middle. A normal day is a balancing day, like a lamp on a table, and you bump that lamp, but the lamp doesn't tip over. That's what a normal day is. A market that doesn't tip over. It just balances all day long, two-sided trading, always going to our projected number all day long. And even on normal days and neutral days, we can predict where the market will close 5 hours in advance. So the certain day types, we actually can predict where the market will close 5 hours in advance, and it closes at that number to the tick. It is pretty fascinating. But you have to have our TPO indicator to know that too as well. Normal days, you can have a wide range normal day, which is a big base, and they won't tip it over, or a small range normal day. Normal variation days are probably the most common day type. And those days, that's really what's going on in those days is long-term traders are waiting on the sidelines, and they're waiting for price to be an advantageous price, and they try to make it have range extension. They try to extend it to the upside or the downside. And when I say either one, it's depending on which, is it normal variation up or normal variation down. But it's the long-term traders, and they're trying to take control of the market. But they're sitting patiently. You can get NV up, NV down early in the morning, and then again in the afternoon. But again, we know exactly that's what's happening. Imagine defining every day, whether it's crude, Apple, Dell, any stock. Imagine being able to define every stock, the day type, and where it's going to go. Neutral days is another balancing day. And on a neutral day, again, it's a type of market that's balancing two-sided trading, and you can have large range neutral days and narrow range neutral days. Actually, neutral, normal, and non-trend, vertical, and trend and true trend are my favorite, and NVs are like grinds, and they're actually getting to become one of my favorites. Yeah, we know by the first hour. I think I've heard of Charles, but yeah, James was my mentor for a while, and now like I mentioned earlier, we filled all our holes. I'm always willing to listen to him, but we're on our own. He's actually not really doing, what he wrote about as much anymore, and they're doing something with volume strips. And anyway, another story, and we're too happy with what we do, so we're not looking to change in any way. But yeah, definitely he was my mentor. Vertical days, large reward days. Trend days, again, you get one a month per market. So imagine if you could be a trader that only traded vertical days or trend days. You'd only trade 6 days a month. You could have 5 trades, 6 trades in a day, but you'd probably never have a losing day. See, that's the problem. Some traders can't sit on their hands on these other day types. Not that the other day types aren't good, but these are high probability days, the vertical and trend days. Not every trade. We rarely get more than one losing trade in a row. I wonder if my mouse is showing here. Let me check something here. I don't even know if you can see my mouse. Let me look. Oh, you can see something. Yeah. Okay. We rarely get more than one losing trade in a row, and we have traders that do win every single day with what we're doing. But you got to realize trading, it's not a contest to how many trades you do in a day. It's about the quality. If you make up a trade, you're going to lose. If you follow the trading plan, sure, we could have a losing trade, but you expect your next trade to be a winner. Again, I rarely see more than one losing trade in a row. Very rarely. But it takes time. You can't master this in a month. You will get 1% smarter every day, and that's what I can tell you. It will take 1 to 5 months. TPO indicator. Our TPO indicator, this is an older version of it. We've actually updated it dramatically. We look at the market, as you can see, the A. Now the A is on the far left side, in case you're looking here. The A is just the first 30 minutes of the day. The A is the high of the 30-minute bar, and the low. The B is the second 30 minutes of the day. So if you put a bar chart next to it, which you definitely can you make a living purely trading your method, not marketing? I like doing these presentations and so forth. I'm not a salesman with what we do. I do kind of have that attitude. I'm sorry. I mean, politely. I will teach you. I will talk to you on the phone every night for an hour. I'll do anything to help the trader who wants to be helped. Yes, I have made nice money over the years selling my software, but I'm at that point to where I don't care anymore because I do have market profile down. But I found that talking on a mic while I'm trading helps my trading because I'm telling myself the story. If I was just sitting in my office, I don't know how focused I would be. Because there is a big problem with being focused. You do have to be focused. You don't want to think. But I kind of do have that attitude, and I understand what your question is. I'm not going to defend it, but I don't know what to say to you on it. I spent $100,000 making my TPO indicator. I spent probably $150,000 doing the trading plan. So, I mean, I spent a lot of money on my software. So, it's a byproduct, but it does make me better. It does make me better every day, marketing it. I love talking about this over and over and over again because it does make me better. Anyway, back to this. This is a P profile. It's a short covering profile. You can see the stem here. A is the first 30 minutes of the day. B is the second. C is the third 30 minutes. D is the fourth, and so on. The O is the opening. I can teach you this in 15 minutes. We have a free demo of this on our website where you can actually get the indicator for free for a week, and there's a couple videos, hour-and-a-half video, just to walk you through it. Now, what's important about this indicator will scare away a lot of traders. Scared me away. I don't want you to think, see, this is a level playing field. I am not any smarter than you. We're all equal, and this is all learnable. I do have a good focus on seeing the markets to develop this software. That is a specialty of mine. But I am not a rocket scientist of any sort. I'd say I built a rocket ship. Now you just have to fly it all the time. But as you know, that's not always the easiest thing to do because you want to think. Back to this. This is a P profile here. What's important to the TPO indicator for us is this histogram. You're used to seeing histograms that are horizontal. I do use a horizontal histogram. I do. I do it correctly. I use a correct horizontal histogram, but I also use a vertical histogram here. And why I would use a vertical histogram is I want to know how much volume was at price, which would be on your right side. I want to know volume at price. A lot of traders just want to know volume. Well, I want to know volume at price. Why? Because I'm an auction trader. I know that high volume areas are natural magnets where people want to conduct business. I know the market will come down to a high volume node and slow up. If it gets through that high volume node, it's going to go to the next one. And we plot all this stuff automatically. I actually plot up my bar charts. No stupid questions as long as they're not antagonistic. There's no stupid question. Okay. Does this work with candlesticks? That's why I was kind of probing. When you see I do bar charts, you could do candlesticks on top instead of bar charts. You can use my color-coded paint bars with candlesticks, and that's why I kept on hinting that I'm sure you had a candlestick on the high. Can someone look on their own and tell me if there was? Sorry, may not get it right. A doji up there telling you had a top on a 5-minute, 15-minute, 30-minute chart. Anyone can look. So the answer to your question is yes. What could market makers are doing running to both edges of volume price in 1 hour? All orders are in the range is filled. I don't know if I understand that question, JW. I'm sorry. I might have to look at that a few more times. This is very unfamiliar to me, the chart graph. Of course it is. Oh, yeah, of course it is. I saw this years before I started market profile trading, and I didn't want to do it because of the graph. But you don't have to use this graph, and I promise you, I can teach you this graph in 30 minutes. In 30 minutes. It's that easy. But it is intimidating. So anyway, back to what we're looking at here. Look how the open of this next day, because each day, this is 1 day, second day. So here's 2 days. Now look how this J ladder went right up to the high volume node and slowed up. This is how valuable it is to us. Market opens up, it comes down, goes up, it's all fluttering around, it tries to rally, gets right up to the high volume node, stops and comes back down and closes right here. And we would predict where this market's going to close. Why? Because it was a narrow range non-trend day, and we're going to predict exactly where it's going to close. I tried using the TradeStation volume price activity. I actually built market profile software in TradeStation first. I spent a huge amount making auto trade and all that kind of stuff, and I could not be as sophisticated on TradeStation as I am on Ninja. Couldn't do it. You can't do composites. I mean, it's just so much work on TradeStation to accomplish what I can do in 5 minutes prior to my day. It took me like an hour on TradeStation, but I have TradeStation software. I'd sell that to you for so cheap because it's just not. I don't use it every day anymore. I used TradeStation for 15 years, 20 years. I was like one of their first users, so I never thought I'd switch to Ninja. Thinkorswim, their TPO indicator isn't that good for me. Let's see. Dotted lines are going to be naked, point of controls. I won't get caught up in that one too. But keep the questions coming. Thank you. I really appreciate that. This is what a bar chart will look like with our market profile software. Now, people will say, wow, you have a lot of lines in your chart. Looks like a Christmas tree. I mean, you're always going to get that. Once you understand what makes a yellow line, what makes a white line, what makes a cyan line, and once you get used to it, it's like playing ping pong with a beer bottle. Eventually, you're going to learn how to do it. Well, these levels tell us so much information within the markets. Like this thick white line is a non-trend day level. It's telling us it's a non-trend day. Well, known as a non-trend day, I'm going to be buying down here and taking it up here. I'll take it to the cyan line first for a first profit target. It gets through there. I'm going to take it up here, and I'm going to sell it up here and take it back down. The lines tell us this. The lines it's a good question. Pivots, I always get thrown at me like traders who say, well, I use pivots, I do this, I do that. And, okay, great. If it works for you, fabulous. I got to be careful. I don't want to come off arrogant, because, I do love what I do. I love MP trading. I am focused on it. But the pivots are floor trader pivots, and they're not the same. The calculation's different. You'll see that ours will work to the tick. It does work to the tick. I don't use any moving averages. Sorry. Oh, the wave line below. Oh, sorry. Actually, I've changed this. I got it. This is really that line right now. We actually updated that, spent more money on it. That is the auction process. So I converted it to this right here. See if it, yeah, it switched. But again, I'm not going to be able to cover everything. Imagine if I'm telling you it's going to take 1 to 5 months to learn. There's no way I can cover all this right now, but I'm going to do the best I can. Okay, as running from the low A period to the high H period in your chart, then running down from H price to A price, or vice versa Y, and then that's doing the big movement. I'm sorry. I might have to answer some questions because I can't grasp it right now. I don't want to have an excuse. I started trading at 4 a.m. this morning without an alarm clock. That's the thing with the type of trading we do. You can trade pre-market before you go to work. You can trade after work. I like the markets a lot on the Globex session because they move slower. We don't know the day type on Globex session. We only know the day type during the day session. But you don't have to know the day type to be successful with what we do. But I start every day at 4 a.m., 5 a.m. without an alarm clock because when I show up, I expect to win. That's how much confidence we have. So when you know you can make money, you're just going to show up without an alarm clock. It's kind of fascinating. How many indicators do you use for your trading decision? I don't use a bunch of indicators. I guess if I had to say how many I use, I'd probably say one, and that was that multicolored line down there, because that will tell me which way the market is attempting to go. It will tell me which direction I can trade in with confidence. But I really use, because it's a great question, and I've never really been asked that question. If you set our market profile lines, our indicators, because it's kind of semantics, well, then that would be a lot of indicators. But to answer your question, now that I've never really been asked that question, the answer I'd say is one indicator and my trading plan to what day type it is. So it's really a great question. Day type is really my indicator. Normal day. This is, as I mentioned, we understand normal days. Normal day is like a balancing day. We're two-sided trading. Look where the market really spent all the time. Look where it closed, right here, this pound sign, right in the middle. So what they do here is they run the market up to see if anyone wants to do business, and they want a completed auction. All auctions are not lazy. Just picture in real life. No one's going to be lazy at an auction. So they run it up here to see who wants to do business. And they couldn't do business. It gets shut down. They bring it right back down to the middle, and then they try to run it down to the bottom side to see who wants to do business. But it's like a lamp on the table. They never tipped it over. So we're actually going to be trying to sell the highs up here, taking it down, all the way down to here, and we're going to be buying the lows down there, trying to take it up. This is actually a perfectly symmetrical normal day. A vertical market, anytime you have a single letter in the profile, it's vertical. That little single letter E shows me it was vertical coming down. The market opens up, spends its time up here, and then runs down, and they can only retrace it up a little bit. It's vertical. We actually have an automatic vertical single print indicator with audio alert. Good question. What percentage of people who use your tools and software are successful? Let me tell you about that. Try to do the best I can on that. I can't make you be successful with your trading. I can't force you. I always get traders that, am I going to do every trade you do? I'm going to teach you every trade I do, but I can't promise you're going to do every trade I do because I don't know if you're getting coffee. I don't know if you're using the restroom. I don't know if your kids are doing this. So, to really, and that's another thing too is, you guys, I think, are a little more serious than a lot of traders. A lot of traders I can come across. I come across a lot of traders who want to get rich in 1 week. They'll tell me, this guy's selling something, he's going to teach me how to trade in a week. It's just that's not what we do. So if you're not willing, I have my favorite trader, Tom, and I don't think he's in here, but one of my favorite traders, Tom, he's an engineer. I think he bought the software last February. I could be off a month. He got the trading plan, and he followed it, studied it, and at the end of 3 months, he was like going, man, okay, I'm not trading yet. I'm not making money, and all of a sudden, at 5 months, I got this, Greg. I got everything you're talking about. Like you said, it's 1 to 5 months. Well, it took me 5 months. and now he's trading 6 contracts, and he's making a living every day from his trading. And he'll say, this is the greatest thing in the world. If you come into my room on Tuesday, and we're free all day long on Tuesday for you guys, and I think we're putting an email that goes out to you tomorrow. But if you come to our room on Tuesday, you can ask Tom or other traders, and they're going to tell you. But most people would rather quit than learn what we do. Most people would rather dismiss what we do than learn it. Why? Because it takes longer than a month to learn. And the fact of the matter is you can't even learn a job at 7-Eleven within a month. You don't know what time all the deliveries are coming in. You don't know the button to hit for a refund on this or that. All jobs take longer than a month. So to say it takes 1 to 5 months is so fair. It really is a fair thing. Now, this is a normal day on a bar chart. Here's your red line saying it's going to be a wide range normal day, and we just define this market. We're going to be selling the highs, bringing it down. We'll be buying the lows, taking it up. Same story. It's like a lamp on a table. It's just a balancing market. It's going to balance all day long. We get caught up in a couple of those questions, so I put this slide up. So successful, it's just not a great answer. I mean, it's a great question, but there's no great answer because I don't have a crystal ball, and I can't see into, is a trader willing to watch our 30 videos? You have to, let me tell you this, the traders who watch our videos twice, because we have 15-minute videos, we have 1-hour videos, we have videos, I'll read down the list, we have videos that cover trend days, night session trading, neutral days, neutral extreme days, excess lows, normal days, vertical days, unfair lows, unfair highs, going too far too fast, trading the first hour, trading the closing bell, short, medium, long-term control, searching for excess lows, excess highs, ledges, try not to make this error, and the list goes on. P days, B days, normal variation days, our Saturday class. So the traders, this is what I can tell you. The ones, I know if a trader even downloads our video when we send them out. It tells me. And I don't tell them that I know that. But those are the traders that are not successful, and I don't see them after a month. They never download the videos. Why? Because they're whatever. I mean, you know the answer to that. But the traders who do watch our videos more than one time are extremely happy each day with our trading. That's the answer I can give you. The ones who watch our videos twice are successful. The ones who watch it once, I don't know. The ones who don't, who pick and choose which ones they watch, they're not successful. I can't control that. I will help them. I will answer every question. I will try to give them shortcuts to, if they're going to get lazy like that. But I cannot control a lazy trader. Let's see. What percentage? Okay. How much trading do you need to determine what kind of day it is? How much trading? It's the first hour. So far, year to date, could you share what your return is? Yeah, I mean, again, it's not a reflection of me. I'm leaving early tomorrow. I'm going snowboarding tomorrow afternoon. So is anyone else going snowboarding? Anyone else taking the afternoon off? If you're a trader, would you be trading all day? So, I mean, again, and I'll tell traders, never make it about me. Never, ever make it about me. Make it about what we're going to teach you. You want to be your own bus driver. It's not about me. Like I said, I built a rocket ship, and I try to drive that rocket ship every day, or I try to fly that rocket ship every day. Yesterday morning, I had drama with the rental I have in Florida with this guy, and I couldn't focus on trading. So don't make it about me. I've never been married, have no children, so I can't be going through a divorce, but I could have drama with a girlfriend. You see what I'm saying? Never make it about me. Make it about what we can teach you. Let's see. Too long, too fast. No, my phrase I used was going too far, too fast. Markets can go too far, too fast. And we understand that. We have a special indicator. That one indicator I told you we use tells us if a market goes too far, too fast. And if it does, we're gonna take it the other way because we know it went too far, too fast. Let's see. It's not right. Yeah. Would you send out? I don't have one. Let's see. Green Acres. Why are your lines better than regular TPO profile? Well, why are my lines better? Well, because right here, let's go ahead and look at this. I'm going to try to show you this as best as possible. Here's the 17th. This is the 17th. Why did I pick this profile to build on the 17th? I love the questions. Thank you. You know, I love presenting Steve's room. You guys are great. Thank you. Why did I pick the 17th? Anyone know the answer? Why I have a profile for the 17th? Anyone have an answer? It's right here in front of you. Anyone have it? Anyone want to take a guess at it? I'll look at the next question. Oh, big day. No, this is actually since the 17th. Nope. It's right here. No. Okay, I'll give you the answer. None of those are right. Look at this right here, and you can go to any bar chart and see it. I'll try to slide one over and show you too. This is where the change occurred in the market. This is where the change occurred. So I build a TPO chart here with a click of a button. We have an input in here called date. And I can change this to date. The drop-down box, I actually did a merge here. I could put date here, and then I type in the date, and it will build the profile for me in a blink of an eye. As quick as you can flip your fingers, it builds it for you. And why is that important? Because right now the market doesn't care about anything below 1470. All it cares about is 1470 and higher. This is where the change occurred. Let me see if I can show it to you on a 210 chart here real quick too. This is how good we are about what we do, and this is what I teach you. I love it. I love what we do. Okay, so if I went back to the 17th, you're going to see the same thing on this bar chart. This is just a 210-minute chart. See, here's this XS up here. You can see the tail. I know you had a doji. No one's looking. So if I go to the 17th, look at this. See how it gapped up here? Look at this little space here. Let me just make it bigger. This is unfinished business right here, too. The market will go down here and take care of this unfinished business. All businesses take care of unfinished business. It's just a natural thing to do. So right here, this is where the change occurred. So I need to know what upper value is, lower value, high volume areas from 17 forward. That's why our TPO indicator is fabulous, because that's just one of the little tricks it does. It shows me the point of control, which they all do, but it shows me the high volume area. But I can also plot bar charts on this. I can do all kinds of things. But most importantly is how quick and how fast I can do something with this. I also have a profile going back to January 3rd of 2012, because that's where the last change occurred. So this is the most important one right now. Every time we get above 17, it's probing. It's probing. It's in initiative mode. It's getting imbalanced, and it's trying to probe to see if they can take it higher. And as long as we're inside this area, this is a balancing area. This bell curves like to come to fruition, just like in school. Market needs to fill this area in. It needs to spend time in here. That's why I was saying it's going to spend time above 1496. You'll see, like, when we traded, like when the market came up above 1495 last week, or not last week, 2 days ago, we said to traders, 95.50 is line in the sand. We get above 95.50, we're going right up to 17. And sure enough, that's what's happened these last few days. Why? Because it needs to fill this bell curve in. Eventually, it's going to want to fill this area in down here, too. It will want to balance and be a perfect symmetrical bell curve. So we just have a fabulous TPO indicator, and I had it custom built for myself, for my own use. Vertical day, okay, what do you mean that you would take it the other way? If a market goes too far too fast, it's going to come back to a balance area. Normal day, again, like a lamp on a table. Your trades are going to feel like you're catching a falling knife or getting in front of a freight train. It's a front run day. There cannot be any range extension on normal days. You can have a narrow range, wide range, as I mentioned. Either way, the day type story is the same. Long-term traders are taking the market to one side, only to be shut down to lack of participants and conviction, and thus creating that single letter tail. How many trades in a day? I'm going to slide something over. I want to show you our chart today on something, and I can bring this back as long as you guys are all having fun and so forth. This is what we had going on today. Okay, I showed up this morning, and this is again, every line on here we have a legend. This green line, look what number it is, 17. Anyone know what the green line is? The 17. It was the upper line I just showed you on that TPO indicator. So we plotted on here. there's a reason we have everything on our charts. You don't have to plot everything, but once you do, you're going to go, wow. Look, like right here's an auction level, steel blue line, comes right down, slows up on the market, goes right up off it. Anyway, showed up this morning and sell set up first thing this morning. Boom. You can see what time it is. I got in here like at 4, so I was just trying to get organized. I put the circle here. We started probing out a value. This was telling me the market was going to go up, and it was also saying it was going to get up to here. Once we got a red bar here, I was able to start selling it pre-market, and you can see what happened. It just came right down. No problem at all. Market opened up, and you can see it was a little bit sloppy, when it opened up, and I started getting my tempo, and what I did was what we call, and you're not required to do this. This was a fiddle in the middle trade. Remember, we understand where the market always is. We understand where it is, why it's there. And this is in the middle. So we're fiddling in the middle. You may not want to fiddle in the middle. It may not be a trade you want to do. But I'm on display. I had a full trading room this morning, and, I go at it. So went short up here, picked the price of the tick, 1675, took it down to the first PT area, and then took it down to the second PT area. And then the market started shooting up, and I really didn't get to, I had a couple traders in our room who caught this, but I didn't get to catch it. Couldn't see it as well as they could. So I didn't mess with it, and I was patient, just patient, and look at this. Look what happens here. Now, I had traders who were getting long right here in this area. But, I didn't see it. I saw it once I put the circle around the bar here and this other bar here. I said, look, we are going NV up. This market is going to go right up to the circle here. It's going to get up there. It's going to go there. So we all start getting long here. But look at all the arrows. This is from a 15-minute chart. This is from a 5-minute chart. This was from a 15-minute chart. This was from a 30-minute chart. So you basically have like 4 trades there. 4 trades. We don't care about any type of market. We don't care about non-trend. We don't care about volatility. We care about volatility. I shouldn't say it like that. We don't need volatility, big range days to make money trading because we're very patient. A vertical day is a vertical day. Trend day is a trend day. Non-trend day is a non-trend day. Same, we're just going to be trading it with high accuracy. Now, this market was channeling up. Everything told us this thing was going to go up. You can see I have my little channel lines drawn here. Look at the trade location. Remember I mentioned trade location earlier? Well, in the heat of the moment today, I was able to sit here and say to traders, look at this trade location. We're going to have a small stop location. Our stop got down to 75 cents right here. So we all start getting long here. We knew we were out of value. We know we were probing, and we knew it was going to pop here. So we're sitting here just going, it's going to go, right? It's going to go. It is going to go. We know it's going to go to the white line. We're sitting there saying it. We're kind of like, it's going to go. Look, everything's all blue. We had one little red retracement bar. Great. Goes back up, moves our stop up to 18, so we have like 75-cent risk, $37 risk, on what, $60,000, whatever it is, $75,000. We have a $37 risk on $75,000. That's pretty accurate. But we had to sit patiently. And we knew it was going to blow up through here. And sure enough, it blows right up. But look what we see. We had to sit patiently. If I had the chat, you would see it. We're sitting there saying, be patient because we knew it was going to go to 24 quarters in advance for our second profit target. And what was the high? 24.50. It happens every day. So here, and what we do is we subtract a tick because if we picked 50, we wouldn't get a fill. So we know if we subtract a tick, we'll get a fill. And we're like, and so then we have more buy setups here, more buy setups knowing it was going to go up to here. We knew it was going to go here. We knew like clockwork it was going to go there. And you just have to sit on your hands. You can see everything was pretty much blue, yellow, one red bar, putting the stops tighter. And look at, we even have a note. We had a blast on this trade because you have to believe and see and believe. I didn't do the downdraft there. Didn't do it. I didn't catch it today. I had a really good day, trading, and we were vertical up, and I felt like I was breaking a rule possibly because it was vertical, so I passed on the short side here. I tried chasing my way in, though. I did. Once it started getting in value, once it started getting in here, I tried chasing my way to the downside, but I didn't catch the downdraft today. That didn't happen. Didn't happen. Then I tried chasing my way in right here too, going into the close because we knew it was just blowing up to the downside right here. I tried jumping in here too, and it was just too slow. Didn't happen. Didn't happen for me. What it is. Some traders might have caught it. I just couldn't grab it today. Just couldn't do it. We get so many good trades in a day. That's what my dad tells me. Like, if I told my dad, if I told him, and I do tell him this kind of stuff. If I told my dad, Doug, I did really well today, but he's like, well, did you catch the sell-off? I'm like, no, but I caught it always going up. I didn't have a losing trade. And, he's like, who cares, Greg? You get so many winning trades in a day. Who cares if you miss something? Even if you get a losing trade, you know your next trade's going to be a winner. So, he psychologically helps me out. Now, this indicator down here, I do have a non-range-bound oscillator you can get a demo from us for. I think that's for 2 weeks. So this is a non-range-bound oscillator. You're just not going to catch everything, but look how we had 5 conviction. Look how I'm telling you, I know you guys had to have something up here. Look how this got really sideways here with 5 conviction. I even have my note here, tops and bottoms, 5 minutes or 15 minutes, and the CP rolls over with conviction and greater than 10 away from P1 to P4. I need to write about this a little bit more. See, when you know, and I'm going to tell you this, and you can either dismiss it or not, we can teach you why the market turns in every place it turns. We can constantly teach you what is the market doing, what is it doing, and you're either going to be able to apply it on some situations, just like if learning 40 words of Spanish. Eventually, you're going to know all those 40 words by heart. So I'm slow sometimes in some things, and I felt like I was breaking a rule up here because I saw some clues, and I just I'm not going to do it. I'm not going to go against this market trying to push up right here, and if it drops down, I'm going to miss it. But once it started closing in value, this is the key. I didn't have to say uncle. Once I start closing in value here, look, I got a 5, another 5. That's the biggest number as I can get. Look how the cycle predictor rolled over. Look how this was just saying it wanted to push down. This maroon line down here was saying this market was still trending down. I tried chasing my way in here. Now, I tried limiting my way in, and I tried limiting it at 20.75s, and the highs were 20.50s. So, as we call it, I was tripping over a tick. Tripping over a tick. We're so good at picking the market to the tick, sometimes you'll trip over a tick. This is the E-mini S&P, but I did try grabbing it all the way down and just never got it. Sir. We don't need to fudge trades with people or anything because we're very happy with our outcome, and we know everyone else will be too once they learn it. Let's see. Let's go to some more charts here. Or some more slides. Normal days, you have 2 wide range, more opportunity on a wide range than a narrow range. Again, it's all two-sided trading. Long-term traders are in agreement with price. It's a tug of war. And what happens at the end of the day just ends up in the middle. It is a fast and responsive day. When you see the market being choppy at times, fast and just choppy, while you're saying it's choppy, no good, we understand why it's doing it. And when you know what direction it's going to go in, you're going to sell those spikes up and you're going to buy the spikes down below. Again, I missed it. I suspected it. I could show you so many charts that told me it was going to happen. I could show you so many charts. I didn't respond to it, sir. I didn't respond to the market coming down like that. Look how here's a 1 up here on a 30-minute chart. Look, same pattern right here. You know I'll catch it next time. I can't catch every maneuver. I don't claim to. Just like Tiger Woods can have an off day golfing. I can, or just miss a putt. Well, trading's the same way. You get one chance. There's no mulligans in trading, except for the next day. But you can just see, look how we start closing in value here. So, I had the clues. I just didn't want to enter aggressively here. There's a clue, closed in value with 1 conviction. Look, we were out of value. Once I get back into value, it's going to go value area to value area, just like I told you. It will go value area to value area. So it's just one of those things. I can show you so many charts where it said that. I'm frustrated now. Not like really frustrated. I'm frustrated because tomorrow morning I'll probably cry to the traders and say I did a presentation. They're all asking about the top, and we'll talk about it and we'll laugh. 15, 24, 50. Yeah, it was a top, but there was also other reasons it stopped there. Yeah, that's true. It's true, but let me show you the other reasons why it stopped there. I mean, it's a true statement. Here, I'll point out all the reasons. Look, upper value. The market had, this was the upper value. This is a 70% number right up here. And so here, I'll give you all the reasons. Anytime I can get 4 MP levels at a price, and I have a trade, it's probably a good opportunity. Now that I'm saying it to myself, I'll count those levels. I just can't remember everything in the heat of the moment. I got my head down, my hand on my forehead right now because I'm like saying to myself, darn, I had that top. I had it. But anyway, upper value area, it was the other day's high. There's also a high volume area. Over 50,000 contracts were traded here to slow up the market. It was 2 of those IBs were right here. So I got 1, 2, 3, 4 things here. And I'm going to write it up here just to show traders tomorrow again. We know. I got 4 MP levels. I mean, I just did. I mean, it's just, now you got me, look, you blew all the steam out of what I did today. And this was the funnest trade I ever had going up right here. Yeah, it works on everything. Everything. Yeah, that's true. Yeah, I don't get every trade. But, I mean, we had so much fun here. Imagine knowing this was going to blow up right up here to the upside. Imagine you knew it was going to go here to the tick. You know, and also, you know, when you're trading, you know, we don't constantly go long and short every day. Like yesterday, we were only taking longs. The downdraft day, we were only taking shorts. Our trading plan tells us, and it was really hinting. I mean, I could have fudged this with a small risk. I mean, it was a small stop, too. I could have done this with what? Hardly any risk, right? Since you knew that was a top, you understand the S&P. I could have done this with a 3-tick risk. But you have to, there's recovery time with trading. There is a recovery time. Yeah, it's not intimidating at all. I promise you, Paul, I could teach you. I promise you. It's not. I'm not any smarter than any of you in here. But anyway, let's talk about recovery time, too, real quick. I don't know if any of you watch UFC fighting. I watch it because they shake hands before sometimes. But I watch it because you could be on the ground getting pounded. Your face is just getting pounded. But you have to focus in your brain on what you're supposed to do to reverse it. Or you could have your arm, you could be in an arm triangle, and you have to know you're supposed to roll to get out of it. Or you know you could be in a chokehold, and you know if you put your hand on the side of your face, it will maybe give you a little bit of breathing room. Well, that fascinates me. I don't like to fight. It just fascinates me that they have to focus under so much pressure. Well, if I have a losing trade, I have a quick recovery time. I just get right on board for the next trade, whenever it is. I don't do a revenge trade, but I'm really able to respond. But after a nice winning trade like this, I have a slow recovery time. I almost don't want to trade for 10, 15 minutes. So you may not have a slow recovery time. And I think I had plenty of time for this, but we were jumping up and down with joy, just being, you know, like this was fun. That was so much fun what we did here. And some traders met their trading goal for the day, so they even quit trading after this, some traders. I don't believe in trading goals with our trading style, though. I used to. But now that, you know, we're so accurate that I don't believe in them. It's not like you should meet a certain amount of dollar, because it depends on the day type or the opportunity and the risk. So, I mean, I just don't believe in that stuff anymore. But anyway, look at this flat line up here, this option indicator flat line with a 2 conviction. Anyway, I'll sulk probably until Saturday over that. But anyway, not like in a bad way. Normal days can morph to normal variation days, but we know it. It's easily seen with our trading plan. Bar charts again. So if you don't like the TPO charts, here's the exact same information. The red line's your IB, the first hour. You can see we start probing up. We start getting conviction. We're just going to take it to the yellow, to the green, and keep taking it up. Some of the stuff may not make sense, what I'm talking about right here. I'm just kind of flipping through some things here. Let's see what other. Have you heard of the voodoo lines? No, I haven't. Low volume nodes are fine for areas of change. High volume nodes are very important for me. But low volume nodes are usually an area change. It'd be a single print, a minus development area, or a tail usually, but not always a tail. Here's a normal variation day. The red line is the first hour, high and low. Here's your letter A. Here's your letter B. That's the first hour. You can see the market starts probing up. So it's just automatically an NV day. I mean, it's that simple. Normal variation days, what's going on is you usually have a smaller initial balance that can easily be tipped over by the long-term traders. Remember, the market, when you're a day trader, we're capitalizing off the intermediate and long-term traders. We're either getting on board before they do or we're getting on board with them because we know they're going to get on board and we can understand when to get on board before them sometimes. So we're waiting, the long-term traders are really trying to take control of the market. And this usually occurs early in the trading session. So either you're going to have range extension or you don't. But the trick is you have to know the correct range extension. So we have that conviction indicator, the number system, 1 through 5, tells us if there's participants. Because like all auctions, you want participants. Lack of participants is lack of conviction. So, you don't want to get chopped up. So we understand how to trade range extension. But the long-term traders are sitting on the sidelines. They're waiting for price to be at a value they consider fair, and then they start entering aggressively, taking the market into an imbalance probe in the direction of range extension. Nice little story. That's the type of stories we tell ourselves. With NV, the market's trying to find a balance area back to two-sided trading where it can take place. The market it's like all businesses. They need to conduct two-sided trading business when it's not in advertised mode. We like to say we're experts. Normal variation days, it's a grind. It's in our trading plan. It says it. If you're getting long on an NV day, it says it. This is going to grind at you. It's going to grind you. It's going to pop up. It's going to pop down. It's never going to get below your price, but it's going to grind in your desired direction. And you have to say to yourself, it is grinding. It is grinding. If you're in the trading room, you could say to yourself, Greg, it's grinding, huh? And I'd be like, yeah, it's grinding, but just stay with it. It's blue and yellow. Stay with it. Nothing says to get out. Just let the sloppy bars do what they do, and we know why it's doing it. It's responsive, but we're there to support you on it. Neutral day, back to a neutral day. You can just see how here's your highs, here's your lows, and the market spends all its time in the middle. I love neutral days. I love selling the highs, bringing it right down. I love buying the lows, taking it up. We got some techniques for that. But remember, we always know the day type. We had a day that went neutral extreme the other day. That's huge when it goes neutral extreme. You got a neutral day that goes neutral extreme, and it is fast and furious and going into the close. And sometimes we get that, and sometimes we don't. But we know it's coming. We all talk about it. We just like you guys do, talk about trades in your trading room. We do the same thing. But we're talking about our trading plan. We're very specific. We're not allowed to talk about divergence. We're not allowed to talk about anything like that in our trading room. If I have a trader that tries to bring that to the table, I say, sir, or trader, if it's a female trader, we only trade our trading plan. We're not paying attention to divergence. We're not paying attention to this or that. We must follow our plan. That way we can be repetitive with what we do. But again, all day types are determined by the initial balance, what price does at that initial balance. Just like a normal day, non-trend day, neutral day is another balancing day. That consists of two-sided trading. So anytime you see a market is sideways, it's balancing. So don't say to yourself it's choppy. Say they're balancing the orders. They're balancing the buy side and the sell side. High. Our percentage of winning trades is very, very high. Very high. Doesn't mean it's going to be for you, but it's very high. Our percentage of winning trades. Traders are trying to get to, their ambition is to be in the 90% accuracy. That's their ambition. Most of them are 70s, 80s, and you're trying to get 90s. I got a guy who's probably 90 right now, 90-something right now. You can ask him when you see him on Tuesday when you come in the room. Neutral market will be fast and responsive since all time frame participants are active in the market. Again, it's a two-sided auction. Let's see what I want to read for us. Trend day. You're always going to have 5 letters or less in the profile on a trend day. Always. You can just see how elongated it is. Opens up, and the letters, it never gets wider than 5 letters. So you never have more than, 150 minutes of the market spending time in one place. Start getting a vertical letter here, a D, and it's just good, and it closes on the high. True trend day. Just like it says, 5 letters or less in the profile. And it's automatically a trend day. And you know that all the way up. You know it. I mean, it's obvious throughout the day. We're paying attention to it. Vertical, you got a single letter in the profile. It's like missing a deviation. It's going from first deviation to second deviation. It's missing a step. So we don't even care about what's happening down here once the market gets vertical. Here's it gets vertical to the downside. Vertical up day, vertical downside. It's just very, very simple. It is really simple, but it's going to take you 1 to 5 months. Vertical days, they are a form of a trend day. It's a must-trade day. It's a money day. It's a day that's hard to be wrong. Single letter in the profile automatically is your first clue it's vertical. Market's looking for a place to pull back, so we're buying those pullbacks, or selling the rallies. The profile is elongated. Value is usually large. Gives us plenty of room to trade in one direction. Because remember, if you have a big value area and you're at the bottom of the value area and the market's attempting to go up, it will go to the upper value area like clockwork. And if the market's attempting to go down, it will go to the low value area. How do we know which way the market's attempting to go? I'll show you in a few. We also view vertical days as a high probability front run day. Anyone need to know what front running is? I can tell you if not. Trading is going to be less stressful when you have a trading plan and you go with the vertical market. That was the problem up there. It was a vertical market, during the day up there, heading up there, and that's why I didn't really want to go short. To the gentleman that was saying, "I'll get it another day." Thank you for that encouragement. It's understanding every move, and I just didn't want to fight it. I didn't want to get caught on it. We don't think. If you got to think, you're constantly going long and short every day. See, that's why, you could have a trading program, and you're like, "Why did I lose today?" The market was going up, and I'm selling it. See, when you know the day type, you'll know not to sell it. And thinking and constantly having to go long and short every day, the markets aren't designed to be a trader who goes long and short every day. Some days you only get long. Some days you only get short. Some days, the first part of the day, you're only getting long. Second part, you're only getting short. That's why it's important to know this information, because the trading plan is always going to be correct for you. We can never outthink the markets. We can never outthink the auction process. We can never outthink the trading plan. We never can outthink it. So we don't try to. So you want to try not to be a trader who would rather lose their money trading the next new indicator, which might be easy to learn. That's not the answer. Let us train you over a few month period. Do candlesticks on top of what we do. Capitalize on that. Bring your candlestick knowledge on top of market profile. It will help you. But we will change the trading world that you're in right now. We can. You'll never look back. Trend days, easiest day type to predict. It really is. This can be the easiest day type to predict. It took me 3 months to not argue with a trend day. I've developed the trading plan for a trend day, but I argued with it for 3 months with real money. Like I said, I'm no different than you. After 3 months of arguing with it, I said I'll never argue with a trend day again, and I never have. This day type can start out at open drive. Like I said, it just never looks back, so the retracements are small. We understand this. It's like the Kentucky Derby. It just takes off. Boom, it's gone. Profile is going to have 5 or less letters. It's one time frame in one direction. Long-term traders have taken control of the market. Price will lead value, but not so fast that it attracts an opposite response by the other time framers. Imagine understanding that sentence. Price will lead value, but not so fast that it attracts opposite response by the other time framers. This market will go to value since it would be a value dominated market too. Pullbacks are small. When you think it won't go higher, it will. When you think it won't go lower, it will. Price does not like to get back into value. Kind of like what I was showing you earlier. It doesn't want to get back into value. I can show you that kind of stuff. You really are looking for any reason to get on board a trend day. Never fade it. Never, ever argue with a trend day. Just never fight this day type. Never, never, never. Don't be a trader who trades this day type without a stop, because you're going to blow up your trading account. If you're a divergent trader, going against the trend, you're going to blow up your account in the end. You'll save more money and grief by having our trading plan or just even knowing how we define a trend day. And you do want to try being a buy and hold on a trend day. Back to 5 letters. I'm going to show you some other things too in a second here. I know my time's probably running close. Just charts. B profile, short covering. Imagine knowing short covering. Short covering is pretty cool. When you have a P profile or a B profile is going to be long liquidation. A P profile is short covering. What's happening is traders who are short in the market, the market just runs straight up at the first 30 minutes, makes the stem, and then they start, wanting to exit. It's old business. It's not new business. That's why it doesn't keep going up higher, but it spends all its time up here. Traders are like spending their whole day who are short trying to exit. They're like waiting, hoping it's going to come down. It doesn't, and it just keeps on inching up, right up to this area here. And it's old business though. So, we sometimes will go short on a P day, but rarely. We're really actually taking it up constantly on a P day because we understand it's a P day. You can see it's a P day. It's obviously a P. Obviously there's a stem. Obviously there's a stem forming the P. As long as they don't get back inside that stem, then, it's a P day, short covering. It's that easy, that fun. Traders, like it says here, are too long in the market and they spend all day exiting their positions. P short is for short covering. B is for long liquidation. And it is old business. It's not new entries. It's old business. How soon are you able to identify the various day types? Immediately. Immediately, if you don't think. Immediately. It isn't immediate. It's right in the trading plan. We're in the trading room telling you. You could ask the question, why are you saying it's normal variation up, Greg? I'd say because of this right here. Why are you saying it's neutral, Greg? Because of this and this. It's right there in your trading plan. So immediately is that answer. Tuesday, you can come all day. Wednesdays as often as you like in the morning. Thursday mornings also. Yes. But immediately on the day types. I get guys that still, see, you don't want to try to outthink what we're doing. You don't want to try to reinvent what we're doing. You don't want to outthink it. It will say exactly on the piece of paper what makes that day type that. And it's the same story over and over and over. Great question, though. But my answer is still immediately. As it's happening. It's just pricing on products. I'm gonna throw this out at you just so you're aware of it. You're with Steve, so I will do anything to basically have you in our trading room for a month. Just as a bystander. I mean, I have no problem knocking off 30% if you request an order form and you put Steve in there as your referral. We're doing a special on our market profile software. I don't even know how cheap it is right now. Generally, people spend like $7,000. I think we're doing a special on both of these packages. Market profile software for NinjaTrader, it's usually $3,000, and our seminar training, which is our trading plans, all our training videos, it's like $4,000, so it's $7,000. I think we're doing something like $2,500, literally. I don't even know the exact price on it. I try not to be involved in any sales, but I think it's like $2,500 or so for all that right now, and 1 month in the room. It's incredible. I think it's like $2,500. If it's not, I'll do it for you for $2,500. I don't care. But it's only 1 month in the room. And the TPO indicator, $8.99. We are doing at $4.99 right now. The letter indicator. I had that custom built for myself, but I do have to pay a royalty on it because the guy didn't want to give me the coding on it. But I spent a lot of money to have it custom built, and he gave me permission. I could sell for $4.99. So you can get $7,000 of software and our seminar plan, which has been it's everything. It's everything. It's like $2,500. You can view our products on this website here, E-mini Trading School. Let's see what else I got here. To enter our trading room, I'm not sure how you guys enter Steve's room, but on our website, there's an upper right-hand corner trading room login. Anytime it's asking you for a password, we're in private time. We're in private time. You have to be a member to enter. I do start very early in the morning, and I will do anything I can to make you understand what we do with market profile trading. It's easy, and it makes me better. On our website, at the bottom, you can get market profile trading terms. You also can get a demo on the TPO indicator or a cycle predictor. We have a lot of little free things on our website. I use a trading clock. You can get a trading clock on our website. Compounding software. I have QuickBooks on steroids for traders. I have a compounding software. I don't know if Steve talks to you about compounding, but that's what makes you rich. Compounding returns. You set it on a conservative setting, and you type in at the end of the day how much you made or lost. You hit a button, it tells you when to start doing 2 contracts. You do it at the end of the day. That's all our traders use it. I've been using it for well over. I can get you Ninja for free. If you're not, I can't help that if you don't use Ninja. I don't mean to answer it like that, but Ninja's free, and you can never let a trading platform, not having one, determine your fate. It's not realistic to me. TPO indicator. I don't have the same TPO indicator for TradeStation. They have one built into it. It's not that great. I have software for TradeStation, market profile software. I have a great value area. I have a great high and low volume nodes. I have a great auction indicator. I have great paint bars. I have great all the market profile levels on TradeStation, but I don't have a great TPO indicator for TradeStation. I have everything else great on TradeStation except for a TPO indicator. I can't harness it. I can't get it done like I did on Ninja. Let's see. Let's take a look. I want to show you a couple other things here. Still got a lot of traders in here, and let me just show you a couple other things here. How do we know which way the market's going? You can make it simple if you're, without the day type, or you can make it harder. You can make it very simple, is because, let's see, let me scroll back, just like to yesterday. You don't have to have all, I'm going to get these steel blues, I can get a little bit less of them, but these are all delta levels. Don't let it bother you. So anyway, this market started one time framing up. See, I have an auction indicator down here. You can see this dot that kicked in right here, telling me this market is only going up. Don't get short. Now, remember I talked about a market being out of value? This green line's an upper value area. We never would want to sell a market that's out of value. Look how this thing's out of value. Well, I'm going to draw it a different way. This market never could get back into value yesterday. Look, one tick, it never got back into value. So we'd never sell it. It's just going up. It's out of value. It's proven. And then look at this dot right here telling me this market's one time framing up. When this market was going down the other day, see where I put the circle here? That's my little alert telling me, hey, we're out of value. This market's free falling. Look, they couldn't get it back into value. Then they get it back into value, and we're just selling it nonstop. Look at my auction. Here's my red dot saying only be short. So we actually knew that day before, that downdraft at 8:30, that this market was only going down. One time framing is exactly what it sounds, one direction, directional. And so this indicator told me, we're one time frame. The long-term options are headed down, as this indicator told me. It was headed down. And we never got a dot saying it was going to go up. These are little retracement dots telling me to get short, get short. Right now, what the market's doing, the long-term auctions, this thick red line is long-term auctions. And you can see long-term, you got this maroon dot. Long-term auctions are pushing down, obviously. So you could constantly, while it's pushing down, you may not know what changes, but when it's pushing down, you can constantly sell the rallies, knowing that as long as that line's pushing down, it will go to low value. It has to go to low value. Same thing to the upside. When this morning, here's my short. The dot came on up here saying we started one time framing down. I knew we'd get to value. So, we just have simple methods like that. You can actually use it on a 15-minute chart like I do too. You can see your same dot. Look, it's been one time framing down. So you just can't be afraid of getting short when it rallies. Here's a dot going up, saying it was going to just go up. And probe. 1, 2, 3, 4, 5 levels there. What does that mean? Does your indicator repaint? There's no false signals with our indicator. There's no after the fact type stuff, if that's what you mean. Here's a 15-minute chart of the run up the other day. Look how we just got out of value. Market never could get back into value, so we'd never sell it. And here's your dot, one time framing up the whole session. And we're just trying to grab the pullbacks to be involved in the rallies to up, with it going up to our numbers up here. 5 convictions. A lot of participants getting on board. This was all conviction going up. Let's see what time it is. Okay. Any other questions? Someone was asking for a prediction for tomorrow on the S&P. It's back to this. As long as we stay below 17, we're going to balance it between 17 and 96. If we get through 96 area, then we're going down to 92. We get through 92, then we're going to fill in the bell curve down here. This is what the market's probably going to do tomorrow, and we'll watch it. If it gets above 17, well, then we're going to say it's back on advertising, probing to see who wants to do business up here. As long as it stays inside 17, there's going to be a two-side trade in here and fill in this bell curve, these little valleys in here. Here's a low volume node. 1050 is going to be a low volume area. You can see this little valley in there. So, I'd have to let the Globex, see what it says in the morning too with the Globex session to really know what's going to happen tomorrow, because that can change tonight. I mean, it can just change, tonight, while we're sleeping. Great question. I'm not one of those people that claim to trade a bunch of markets. I specialize in the S&P. If you can't make money focusing on one market, because it's just if you can't do it on the one, well then changing grocery lines to other markets are not going to help. But with that said, I do trade bonds. Here's the exact same information on bonds. You can just see this bonds. Here's your dot here. Started one time frame and up, goes right up to our delta level. But I do trade bonds. Exact same formula, same thought process. When this thing's one time framing up, I'm only looking to go long to our delta levels. If it's one time framing down, here the market kind of dropped today, and I really couldn't get short on it. I had a hard time trying to get short, but I had no problem getting long, taking it up off these lows down here. But I do bonds, but I don't do every trade on bonds. I try to do every trade in the S&P, and I try to trade vertical trend days or obvious signals on the bonds. I'm not that agile to trade multiple markets. I'm not. I know my limitations. Well, depending on the day type, that's a good question. Does price flow through low value areas, low volume areas, or does it hang out there? Since not much business has been done there, sometimes it stalls there. We're aware of that area. We have a technique to trade it. We're going to look for it to hold. We do have a technique for it. There's no. You could blow through a low volume area, but since not much business has been done there, the market slows up. Just like at any price on any item, if there's low volume at that price, well, not many people want to do business there. What size account? $2,500. No, we have a free 3-day trial. I will run the special with you guys till next Friday. So you can come Tuesday all day, and Wednesday morning and Thursday morning, and Friday will be the deadline on that pricing. It's so much more than one day. I mean, you just can't. You're not going to see a trend day possibly a Tuesday, Wednesday, Thursday. You may not see a vertical day. Remember, there's 8 day types. If there's 8 day types and 20 trading days in a month, well, you know what it is. I mean, do the math. And normal variation is the most common day type. So you're not even going to get to see all the day types. It changed my whole trading world doing what I do. It will never quit working. It's forward thinking. It's forward trading. It's forward building. So it will never quit working. It's a lifestyle, and it will change your whole thoughts on everything that's for sale in the world once you learn market profile. Let's see. I think I'm hitting the wall, traders. I'm getting a little bit tired. No, Ziggy. Look how many buttons there are in Ninja. Look, you can change. Listen to the buttons. You can change the instrument here. You can change the time frame here. You change your candlesticks, your bar spacing here. You draw lines here or circles here. You can zoom in, zoom out, crosshairs, data box. I mean, there's no buttons in Ninja. There's nothing to learn at all. There's nothing to learn in Ninja. And by watching our videos, you automatically learn it. I mean, if you said that to me about TradeStation, when there's 500 buttons in TradeStation, sure. But with Ninja, absolutely not. It's basic. We can get free data. We can get you Ninja for free from our website. Yes, you can use it on stocks. Yes. You probably signed in late. I was telling you about my Apple prediction. Good point, Jim. I'm in mountain time, but yeah, I know. I get 7 hours. I get 8 hours sleep. I kind of go to bed at 8 o'clock right now. My life is snowboarding, hiking in the woods with a 100-pound golden retriever, trading, thinking about trading, market profile. I've totaled one car, daydreaming about market profile one day. I was daydreaming and I totaled my car. Market profile is incredible, and it is for real. It does work. You just have to be willing to spend the 1 to 5 months to do it. What time period? It's always 1 hour, JW, for every market. It's always 1 hour for every market. 1 hour. Here's the bonds. Here's the bonds on it. It's always 1 hour. A is the first 30 minutes. B is the second 30 minutes. So you can see in the bonds, the first hour of today, the low was 15, the high was 22. It said it was going to go, and it did tip over. It did say it was going to go. See, I'm not that agile where I can catch every bond trade. I saw it when it built some poor lows and so forth, but I just grabbed it on the S&P. Now I see this 15. It was like it was going to tip over. I'm just putting myself a note here. I mean, I got to change the font color though, so I see it. I got to remind myself of that because we have calculations for markets to what's going to tip over. I'll just throw that note up there to remind myself tomorrow. Thank you so much. It was very nice of you, sir. Thank you. If you sign up for a 3-day trial, we do. Thank you, David. Yeah, I don't have your email. I think we exchange emails and all that kind of stuff. I don't have your email. So you want to sign up for the 3-day trial on our website. Thank you. It is a great concept. I do enjoy it. And you can put your candlesticks right on top of it and capitalize on that. Thank you, Stephen. Thank you, Jim. I appreciate you guys, working late today. Thank you so much, sir. And I appreciate too, Jim. I've never talked to you. I don't know you, but I appreciate you participating too. Any other questions, traders? Thank you, Paul. I'd love to show it to you. I will. Thank you very much. It's very nice of you all. I really appreciate that. I'm going to sleep better tonight knowing that. And like I said, I will, if you're a customer, I will wear you out teaching you this, and you will quit before I do, if you're going to quit. If you're a quitter, and I'm sorry if that comes off wrong, I'm not saying you personally. If you're a quitter, I won't quit before you will. You'll quit before me. You'll get tired of talking to me every night for an hour on the phone because I will do that with you. I will dominate the conversation. Unfortunately, for the first 30 days, I notice that with traders. When I do one-on-one with traders, first 30 days, politely, please don't take this the wrong way because I don't know how to say this eloquently, but I'm going to be teaching you for the first month an hour every night on the phone. There's nothing you're going to be teaching me. You're going to be listening. And you're going to go and you're going to refer to our trading plan or our videos. And then all of a sudden, after 30 days, you start taking over a third of the conversation. Why? Because now we're talking the same language. After 2 months, you may take over half the conversation. Why? Because we're talking the same language. Before you know it, we're both talking the exact same language. But you can't talk my language for the first 30 days. You might be able to, but you know what I'm saying. You know what I'm saying. Go to our website. It's right on our website, Rosa. I'll type it up here. Just sign up on there, or just sign up or show up, whatever you got to do. But to get the discount, just so you know, you have to put Steve's name in on the order form. You have to put his name on there. If you ask me for a discount and you can't put Steve's name on there, I can't give you the discount. I can't do it. It has to be Steve's name. Has to be. Thanks, traders. I got to go. I'm hitting the wall. I appreciate it. I really look forward to seeing you again, and I hope I get to do this again with Steve sooner than later. Good night.
Greg, thank you very much. And thank you, everybody. Have a good evening. We'll see everybody in the chat rooms tomorrow. Greg, very good presentation. Enjoyed it.